All right, team. Welcome to another quick daily bias today. 1st of May today. Do you know what happens in May? They say you sell in May and you go away. It isn't just a meme, though. It is one of the most consistent patterns that we've had across the board throughout the years. This applies to TradFi, so traditional finance, crypto, all of that stuff. Obviously, we know as smart money traders, we have things like seasonality we can take a look at. You can see here, usually S&P 500 taking dips, and we can see usually the dollar taking a big spike in May, correlated inversely to indices and risk on, of course. If dollar goes up, we know that anything that is risk on, like crypto, like indices, even some stocks tend to go down. So very important shift here with the new month coming in play. Usually you tend to see May into October, you have slightly weaker returns, okay, so across the board. So we need to kind of adjust our trading strategy accordingly. And we'll take a quick look here at what the charts tell us, okay? So first of all, usually, as always, the driver, which is the dollar. You can see yesterday we have lost the 4-hour range, which was here. We made a lower low, but in reality, this is the range still. So as long as we don't close below the $97, I am still aligned with the bias of seasonality coming into play, which I'll show you here on a daily. As you can see, May going up. We have started May now, so we have started officially. So I'm expecting the dollar to reverse here, unless, of course, it invalidates. The target is our $99 to $100 fair value gap, potentially even equal highs here in that we formed back in April, right? And as you can see, seasonality equal highs between April and May. So it's rather strong. Obviously, yesterday had a correction, but we will see how this plans out in the short term, okay? With regards to indices, of course, what I've got here, I've got the 3 comparisons on the hourly chart. On the left, NASDAQ 100, in the middle, S&P 500, and on the right, Dow Jones. So tech heavy, top 500 companies, and obviously more old school investment and financial investments, right? More institutional and old money. There is still a divergence playing here, as you can see. On the hourly, we are now, just as we speak, attempting a higher, hence the question mark. And obviously, this was the previous all-time high with the black line. Whereas here, yesterday, the S&P showed the most strength and pretty much went for new all-time high quite decisively. Dow Jones, we caught this beautiful short here all the way down, and we also caught the S&P 500 short, which was here. We took all this move down. But back to the comparison, you can see that Dow Jones has recouped, has come back with that down move, but in reality is now fighting the previous all-time high, which is this black line up here. So it will be very interesting to see in the next trading day or so what happens here before the new week, with May seasonality obviously playing against indices. I am expecting a little bit of chop, and if you do zoom in, we can see a little bit of chop at the beginning of May is to be expected to then close May bearish. So that's kind of what I am forecasting for the indices. A little bit of chop here, create some liquidity, kind of like what NAS is doing here already. It's going to likely chop here, and we'll likely see these two other indices as well chopping for a little while. What does that mean? It means that we are not going to enter blindly. In May, we will definitely see more liquidation, more fake outs. That tells us that we need to be a little bit more cautious, maybe trading less in terms of amount, but taking better quality setups, okay? Quick look at gold as well. Gold still sitting to the middle of the range. As you can see, we are sitting between this high and this low into that 50% 618 area down here. And we've been playing the range because gold has lost that 4-hour level quite. He actually melted. That's why we took that short. And yesterday we were able to also catch this quick scalp up. Now, I am going to be sitting out of gold because this is not the cleanest structure. So basically after this trade either goes to TP or moving stop loss in profit, I'll be sitting out. And the reason is I'm only interested either at heavy discounts, meaning coming back into this 4-hour order block down here in the $4,300 range, or I'm interested in selling a premium up here somewhere into the 5,250, 5,300. So right now, middle of the range for gold, nothing too enticing there for me. Whereas silver has been giving us some much cleaner price action, and we are also in this long still going. Hit TP1 yesterday, likely hitting TP2 soon, and the reason is you can see, yes, it is still in the middle of the range, but it retraced a lot more, giving us that discount area into an order block here, and we were able to catch a beautiful entry one. Didn't quite tap entry two, but that's okay because we still got exposure now into the long, and we are obviously going to target the premium now. We enter at a discount, meaning we bought low, and now we're going to sell high. How high? Well, it will obviously depend on gold, but ideally we come back into the 618 area, which is up here, and then ideally even more so we come back into the 76 from the high to the low, which is obviously our premium area. So this long could end up being quite a swing if market decides to go that direction, but don't be too greedy. At 1 to 3 I will definitely be taking about 75% out of the position into this 1 hour order block here, which is a clean buy to sell move. This is where I'll exit most of my position and obviously keep some for later on. But once this position is closed, once again, I like to wait for a short from a premium or another buy potentially into discount. Okay, so silver's giving us a bit more clearer price action. This leaves us to Bitcoin. Bitcoin has been playing, we've been killing it. We've been playing this range up and down. So this is our fourth trade on Bitcoin. We took this short and went to full TP. We took this long and it went to full TP. Then we took this short and now we're taking this long. And the reason is Bitcoin is ranging. You can see this black box I've got here on my chart. This is the range in Bitcoin, and our job now is to what? Play the range, meaning we buy low, we sell high. Obviously, there will be a time where the range gets invalidated and we either make all new highs or we simply go lower. Until such time that happens, we are okay to keep playing this range. But this position, based on the thesis that the dollar is going to likely reverse here, leans towards closing majority of longs. Okay, I am expecting some sort of reversal. I'm more interested in selling at the moment rather than buying. Okay, risk on assets, we just saw S&P indices, DJ, NAS, and even gold and silver. The reason why I'm closing this position very likely soon, and also why I don't want to be too greedy on a long silver, is because I am expecting risk on to roll over, okay, if the dollar goes up, of course. So that gives us obviously some nice potential targets to buy down at a deeper discount, potentially into the 67,000, 69,000, 70,000. We do have this real clear level of liquidity on Bitcoin sitting at 70,500 with equal lows. That will be an area that I'm definitely interested in for buys. Okay, so we're looking at low to the high. This is our more macro range, if you like, and you can see that we are sitting in that line. We're sitting at the 618 on the dot, which is the starting of the discount for me. It's not my favorite area to trade off, but it's definitely considered a discount area. So a long situation from here could start to shape up, but if you look at something even nicer, and I'll show you here in a second, the real risk to reward, the best risk to reward propose itself into this 4-hour order block down here, which ends up lining up quite nicely. Excuse me, I'll need to get it. Ends up lining up very nicely into the 786. So the only time I'll be interested again at buying Bitcoin, it will be basically sub 70 or into the 70s and sub. So an area like this one or a setup like this ones, I tend to be interested, and I will be happy to wait for this. Okay, so 1st of May, this is where traders get trapped. Let's not trade like it's April. It's not April anymore. The market has changed. We're officially in the sell in May window. Okay, so something to keep an eye on, and a reminder when we're trading. Doesn't mean that the market crashes today, okay? But it does mean that the conditions have shifted. There's less trend, there's more manipulation, and there's more fake outs, okay? And with that, I'll see you guys on the next one.